Transaction Capital, which is in the business of facilitating finance and insurance for the taxi industry, has released its annual results today. For the year ended September, it's reporting headline earnings per share up 18% at 682 million rand. It says despite a difficult economic terrain, its businesses are resilient and have been able to grow. The company also announced a significant deal with taxi association SANTACO. SANTACO has bought a 25% stake in SATaxi, which is a major subsidiary of Transaction Capital. The Taxi Association paid 1.7 billion rand for the stake. Well, to tell us more about the Transaction Capital's results and the BEE transaction, I'm joined by David Hurwitz. He's the CEO of Transaction Capital, who's standing by for us at our JSE studios. Thanks very much for joining us, David. Your SATaxi division recorded headline earnings up 21% at 368 million rand this year. Just give the viewers a sense of the drivers of that growth.
Thanks so much. Yes, excellent growth by SATaxi. All of this growth is organic growth. The various drivers of growth, on the one hand, we have a finance business. We grew our book by 13%. That's a growth in gross loans and advances, and we were able to keep our credit losses stable in this difficult environment. So that's one element that drives growth. But the real element that is pushing growth in this group across my entire Transaction Capital group is the insurance business within SATaxi. There we were able to grow our gross written premium by 23%, and the real thing is that we've been able to attract new customers to this business. We attracted 10% more new insurance customers to the business as we start selling insurance not only to customers who take our finance, but any taxi operator in the open market.
So let's stick with your the insurance arm. You indicate that 85% of the taxi firms that you actually loan money to tend to take up insurance with you. Why is that? Do you make the value proposition so attractive? I mean, given the fact that the insurance sector is quite competitive.
Yes, the insurance sector is extremely competitive. Our big competitors would be the large players, the Santums, the Hollards in South Africa. And really our benefit is that we focus exclusively on a single product. So our insurance is really focused at financing, in the main, a minibus taxi for a minibus taxi operator. What we do is we don't outsource repairs when there are insurance claims. We've built over the years our own mechanical refurbishment capability right through to importing our own parts. And because we're only repairing one type of vehicle in one color, we're able to be very efficient in our repair channel, and we don't leak margin to anybody else. So this allows us to be extremely efficient in our insurance business, which then allows us really to manage premiums to be as affordable as possible. And then obviously we're very invested into recent technologies, really telematics type of technology and vehicle diagnostic types of technologies to try and identify problems in the vehicle before the claim happens, and to try and avoid claims and fix the vehicle before the repair work gets too significant. So that really has allowed us to win market share.
David, what are your observations in terms of taxi owners being able to keep up with their loan repayments on loans? I ask this in the context of a difficult economy, one where fuel prices have consistently been rising, and of course sometimes the taxi industry choosing to absorb those extra costs because they're not sure that they can necessarily pass them on to the consumer.
So the environment is very, very difficult for a taxi operator. Really what we're seeing is fuel price increases, as you correctly point out. Fuel went up by 12% on a 12-month rolling basis. That's petrol, and diesel by 16%. The price of the vehicle itself, the minibus vehicle itself, is very expensive, and this all stresses loan affordability. What we've had to do over the last period is really work very, very closely with our customers. What we've done is we've focused on lending amounts to more creditworthy customers, and that's been our reaction to this environment. But the minibus taxi industry has reacted as well, and as you say, fares have gone up. We sampled about 800 routes, and we saw fares increase, by way of example, in Mpumalanga. by as much as I think 23%, and the lowest increase would have been 9%. So minibus fares have been increased to pass this on to the commuter, and at the end of the day, this is an essential service. 69% of all public transport gets trapped in the minibus taxi industry, and commuters have to get to work and back. This is an essential service and a non-discretionary spend item for commuters.
David, thank you very much for giving us some insight. We've run out of time, but thank you very much. That was David Hurwitz. He's the CEO of Transaction Capital.